I funded an account. I tagged the project account with just $50. And 7 days later, the account was up $500 profit. No signal, no robot, just price action and smart money strategy. In this video, I will walk you through the exact step I took, step by step, and how I was able to do this. Stick with me. Do not skip any part of this video because every information matters if you want to achieve this result in less than 7 days, especially if you are handling a smaller account. And as you watch this video, first try the strategy in your demo so that if you make any mistake, you can quickly correct yourself. But if you follow the exact step I shared here, you will get even more results that I did. Welcome back, traders. My name is Juliet, and this is Finspoke channel. Subscribe if you are new in this channel. Leave a comment below. Let's get into the chart. All right, traders. This is the trade, and I'm going to walk you through how I was able to get this trade. This is the first one and the second one. First, you notice that price was rallying up, and when it get to this place, it was rejected. This is Euro USD, and this is 1 hour time frame. So when price gets to this level, it was rejected, and it became the resistance zone. Price started running down. When it gets to this point, it gave us a wick, which is a reaction. It was rejected. So when it gets to this place and gave this wick, I suspect a pullback. I also look at the left side, what price has done previously, because this is one of the things that most traders fail to do. Wherever price react, check if it has done something like that previously. You can see price reacted here, price reacted here, and if I keep going, you will see others. So this is actually a kind of support. It has been a support zone and a resistance zone at the same time. At some point, it acted as a support zone, and at some point, it acted as a resistance zone. So once price gets to a zone, it will react. So when price reacted here, I grabbed my Fibonacci retracement. I placed it here and stopped here. What am I looking for? I want to know where the pullback is likely going to end. I was expecting this 25%, which is 0.3, 50%, which is 0.5, and the 75%, which is 0.618. And it crossed this 0.3, it did not react. At 0.5, which is half of the movement to the downside, it reacted. It gave me this rejection block. This rejection block is a liquidity builder. So I know that the smart money, they want to build liquidity at this zone. So I relaxed and wait for them to build the liquidity and actually clear the liquidity themselves. So when they build the liquidity, they pushed price up a little bit and get to this 0.618 zone, and they reacted again. And I put this line. That was when I put this line, because I was waiting for what will happen. And I put this line. Now, when price is at this zone, to understand these few things that I just mentioned here, if you've not watched my video on, or you can still go and rewatch that video again, it will make more sense to you on this trade that I caught here. My video on how I do top-down analysis is number one. The second one that will help you, because I combine the three here, is best price action trading strategy. And the third one is Fibonacci retracement strategy. I use price action here, which is this week's I am explaining. I use Fibonacci, which is where I was able to get this reaction here as a pullback. And my normal top-down analysis. Now, when price gets to this level and reacted, when price gets to a zone, look at the two things it will do. One is to break the zone with a body and close above, pull back and reverse to continue to its original direction. That means to create another high if it is to the upside. If it doesn't do this, the next thing it will do when it gets to a zone is to get to that zone, pull back, touch the zone again. That is when it normally forms this double top. And it pulled back and started coming down. These are the two things price does when it gets to a zone. Now, when price reacted here, I waited to know and to see if it's going to break this zone. And if it breaks this zone, what it means is returning back to this level. But no, it did not break the zone. It pulled back. With all of these weeks, I just quickly know that they are just building up internal liquidity. So it came back and gave us another rejection candle, trying to retest this place as a support zone and also make it a neckline if you understand what chart pattern is. This is a double top chart pattern that is being formed here. So when I saw this, I know that there is a presence of buyers. That's what this means. But let's say if it will break this zone, that's the main thing there. It get to this level, it didn't break the zone again. And it pushed back. That is where this line comes to play. What am I expecting? I was trying to understand what these people wants to do. If price should continue pushing to the downside, for it to cross this zone, because this zone seems to be a strong zone, it has to go back again. That's where it gets interested. So that is this movement you see here. It returned back to come and retest this zone before pushing down. I took this trade at the retest of this zone, or you can call it at the end of this pullback, because what we normally say is when you are following this M pattern, where you enter a trade is at the break of this level. If you follow this double top chart pattern rule, this is the neckline. The safe place to enter a trade is when price break this neckline and retest, which is this movement, and retest, you now enter at the end of the retest before you follow it to push down. I clearly understand this pattern. So whenever I spot it, I allow it to form. That is patient in trading. I allow it to form. When this form, I waited to see price break this level because it's a support zone, for me to be sure that it wants to go down. Now, you can see that price actually break this level, but not with a good body. The moment it break the level, buyers pushed price up. So I have to be patient again to be able to enter the trade at the end of this pullback. So when price broke this level with a body, no wick, which means sellers were in control until the end of this. And immediately buyers entered with this engulfing candle. I relaxed, let them play their drama finish. This is patience in trading. So I was actually waiting to see where the pullback will end or where the retest will end. And price returned. There is an inducement here, but that will be a video for another time. Price returned to the original zone to retest the zone. That was where I took the trade. I took this trade at this 15 minutes. Closed the trade for me and started pulling back. Normally, when they make this move, they will return back because they create a gap, market inefficiency here. So they will return back to the original point where the move started. When price gets to this level and reacted, when price reacted here, I grabbed my Fibonacci again to check. Why did I grab my Fibonacci? Because of this insider back candle here. And because of this reaction here. So I was actually expecting price to return here and react, or to return here and take off. So when I put the Fibonacci retracement, I now saw that price crossed 0.3, 0.5, and is almost at the 0.6 that these reactions, a little bit above 0.6, that this reaction happened. I placed this trade. If it goes well, that is fine. If it didn't go well, it's still okay. If you look at this very well, you see that my stop loss here is bigger than my stop loss here. My stop loss here, I had a more smaller stop loss here than I have here. So the trade actually executed to this level, and I get out of the trade. This is 2 days trade. It's not a 1 day trade. This is 2 days trade. I want you to know that you cannot start trading today and start being successful today. Every single trader you see has a strategy. And every trade they take, there's also a strategy that made them win that trade. Remember, there is no holy grail strategy anywhere. Sometimes the strategy works, sometimes it also fails. You can get your strategy right. You can get your analysis right. But if your risk to reward ratio is nonsense, you will still struggle in trading. What I'm trying to say is this. I did not just wake up one day and move $50 to $500. No. It takes years of experience. That's the message I want to pass to you. This particular trade was New York session, and this particular trade was London session, the 2 trades. So this is the setup. My first sell entry was at 1.16606, SL at 1.1675, while the TP is 1.15843. This gave me 1:7 risk to reward ratio. So right after I spotted the second opportunity, entry at 1.16350, SL at 1.16501, and take profit at 1.15541. This second trade gave me a risk to reward ratio of 1:4.99. Both were structured based trades, no indicator, no bots. And I also want you to understand that you are trading with machines and bots whenever you come to the market. So trade smart. Price confirmed direction with the break of structure. I entered on a retest and I managed both with strict risk management. Most importantly, I controlled my emotions by allowing that trade to play out. Note this. Within hours, both trade hit full take profit. That was how I flipped $50 to $500 in 2 days, just 2 days. I want you to know that this is not luck. This is me following strictly my trading rules. So the main take home here is that I reacted to what price showed me, not what I feel the market is going to do or the market will do. Trade is not about how much you funded or how much your capital. It's about how consistently you apply your edge. Download my free weekly trading checklist below. That is what I use in this trade, and I use it in all my trades. I hope you've learned something. Hit like, subscribe, and share this video. Make this video go viral. Drop your question in the comment section. I will sit back to answer all of them, one after the other. Thank you for watching.